we hope to produce a lot of silver equivalent ounces, but also they're very low cost silver equivalent ounces. The all-in sustaining cost for the ounces in the Los Ricos district would be about $12 a silver equivalent ounce.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for July 8th through July 15th, 2025, while supplies last. First this week, we have 90% constitutional junk silver at spot price. That's right, no premium at all, just spot. Next, backdated 1-ounce Platinum Eagles are only $249 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. I'm your host, Dunagun Kaiser, and today I'm glad to introduce a new guest we've never had before, and his name is Brad Langille. He's the CEO of GoGold Resources. Brad, thank you for joining us this first time on Liberty and Finance.
Oh, good morning. Thank you. Great to be here.
We are grateful that Rick Rule, a regular guest on our channel, whom our audience knows and loves well, has recommended that we speak with you because you're one of the hand-selected exhibitors and speakers at his upcoming Rule Symposium on Natural Resource Investing in Boca Raton, Florida, with your company, GoGold Resources. We understand that you're coming to us from Mexico, where you not only domicile, but where your major activities and resources of your company, GoGold Resources, are located. We want to hear more about that specifically. And folks, we also saw a very interesting interview with Rick Rule directly of Brad. Brad, we're going to put a link to that interview in the description of this video so people can dig in deeper. But first, if you could just let us know how GoGold Resources came to be and how it is that you're located there and why the resource that you are sitting on top of is so promising for prospective investors.
Well, great. Yes, GoGold's been a company that's been around for about 13 years. And myself, I've been in this industry for 32 years, and for the last 28 of that in Mexico. And this is really the fourth public company that I've led in Mexico. And we're a group that have built 4 mines down here in those companies over the last 28 years. GoGold's been the company for the last dozen years. And we operate a operating mine where we produce gold and silver and a little bit of lead and zinc and copper. And we've been doing that now for 11 years. And we also have our very exciting Los Ricos exploration development project in Jalisco, Mexico, on the verge of construction.
In your recent interview with Rick Rule, you laid out a very interesting prospects for your definition of the resources there. You've been working for some time, as I understand, through a drilling program to define the resource, and with a lot of excitement generated by your existing investors, you are shifting some of your energy into actually moving part of your development there into towards production. That's going to be a big move forward for part of your resource while you continue to define another part of it. Can you elaborate for us on where this resource is, why you're finding that it's so promising, and what you're doing to move it towards production?
Right. So the Los Ricos project is really 2 projects that span over a distance of about 25 miles in strike length. And this district scale project we first acquired in March of 2019 for $7.5 million. And that was 25 concessions. And over the last 6 years, we've increased that land package to about 45 concessions. So we refer to Los Ricos South and Los Ricos North as the 2 separate projects. And in Los Ricos South, where we've started our work in 2019, we drilled off a resource, which we've now brought to a reserve. And in the area that I'm circling on the map here, and that area where we have close to 100 million ounces of silver equivalent reserves now in a final feasibility study. is part of the district that is on the verge of being built. We're just waiting for our final permit. We have some of our permits today. We, for example, have our blasting permit, which is a very important permit, one that we need. And we're just waiting for our environmental impact and our change of use of land. So over those 6 years, we drilled in the district over 250,000 meters of drilling. We've completed 3 economic studies. First, a preliminary economic assessment in Los Ricos South and one in Los Ricos North. And then we advanced Los Ricos South to a final feasibility study. So, that brings it to plus or minus 10% of accuracy. That's what we aim for in a final feasibility study. And we're ready to embark on the construction now.
One of the facts that Rick always sensitizes our viewers to is the value, the latent value that he sees that the market has not yet recognized. And you kind of, in your interview with him, you laid out how you went about giving an estimate of the net present value, not only of your resource, but also of the the financial strength of the company. And if you add that all up together, what even in the present time, the equivalent value of that would be versus what the capitalization of the shares are right now. Can you give us a thumbnail sketch of that so people can understand why Rick sees this as an under-recognized value play right now for his prospective friends and investors like our viewers?
Well, if you look at GoGold, we're not just an explorer. We're not just a developer. Today, we are actually a producer. And today, we produce about 2 million ounces of silver equivalent at our operating project, which has been operating for 11 years. In Los Ricos South, the project that we're about to build will produce over the first 5 years about 7.2 million ounces of silver equivalent. And we also have our Los Ricos North, which is at a earlier stage study, a PEA, but it is projected to produce about 8.5 million ounces. So all in all, in the company, we're going from 2 million to 9 million to 15 to 17 million ounces of production over the span of, say, the next 5 years. In Los Ricos South, that build, once we have our permit, we're shovel ready, we're ready to go, that build is going to take 24 months of construction and then 6 more months to ramp it up to full production. And we arranged our financing packages. We've arranged our business plan that while we're building Los Ricos South, that we will be taking Los Ricos North to a final feasibility study and getting a permit for Los Ricos North. We have more drilling to do up there. We have more engineering work to do. And then again, that is to get that projected 8.5 million ounces. So if you look at the company, you look at the profile over, say, the next 4 or 5 years, again, it's 2 million to 9 million to 15 to 17 million. Or in other words, it's a smallish producer today, but a good producer. Makes us over $3 million a month of free cash flow. Going to a mid-tier with Los Ricos South, going to a large mid-tier with Los Ricos North as well. And, really at today's commodity prices, Los Ricos South, in our study, at much lower prices, had an NPV of about $355 million. But if you apply the current spot prices or close to spot price, you'd be looking about $650 million NPV in Los Ricos South and similar to that in Los Ricos North. So over $1 billion of net asset value or net present value in the Los Ricos district. And that is discounted at 5%, and that's after tax. So really, the value opportunity for the company today that's trading at in Canadian dollars, and all the dollars I'll talk about here are US dollars except for our trading price. We trade on the Toronto Stock Exchange. But in Canadian dollars, we trade at a market capitalization of about 835 million. And of course, if you convert that today to US dollars, you're looking at about 600 million US. So to be trading at 600 million US for a company that is on the verge of moving to a 9 million ounce a year producer, then to a 15 to 17 million ounce a year producer, that has the potential to greatly, we believe, greatly increase the market capitalization of the company as we move to a larger mid-tier silver producer in our space. And I also have to mention that not only are we going to produce, we hope to produce a lot of silver equivalent ounces, but also they're very low cost silver equivalent ounces. The all-in sustaining costs for the ounces in the Los Ricos district would be about $12 a silver equivalent ounce.
This story is one that I think the reason that I hear it from multiple invitees to the conference is because Rick loves this particular type of story as a sweet spot where you're not only expanding through an ongoing drilling campaign, the definition of the size of the assets themselves. That's one vector of potential financial growth. But at the same time, you're moving forward through these stages just from not just being, as you said, primarily, even though you are doing some positive cash flow, existing production, but you're moving the rest of your operation forward through that growth curve in maturity from exploration to development and on towards production at a time when the market is also moving up the prices, because you talked about, even in your discussion just now, how the economic feasibility looked exciting even at much lower spot prices, and now at higher spot prices, as Rick says, it's going to be just stupid potential profit. For those investors who want to understand why it benefits them to get in with a company that's about to expand their resources and move forward on the curve at a time of increasing value of the commodity. Can you help explain how the multiplicative effect of those three can really add to the reason that, again, Rick sees this as a compelling value story?
Yeah, I would say, if we look at silver and gold producers as I'm sure your investors, institutional investors, retail investors, and they look at analyst coverage of these type of companies, and they'll look at in the development phase of the company, where do you trade as a multiple to your net asset value of the company. And today, even at 600 million US, most analysts would feel that we're trading around 0.45 to probably about a 0.5 net asset value. So that's taking, your plus $1 billion value of the Los Ricos district, taking our operating mine, which would have a value of about 150 million NPV, and the district, in excess of a billion, probably closer to about 1.2 billion. And you'd say, okay, we're trading in the vicinity of 0.45 to 0.5 times that $1.4 billion value. Now, as you advance your project from development to, as we take it from that 2 million ounces of production and we add on the next 7.2 million ounces of production, of course, then you're producing those ounces, and that multiple to the net asset value of the company is going to go up. And it's probably going to move more towards 1 times times your net asset value of the company. So, that 600 million represents, as a lot of analysts would cover our company would say, 0.45 to 5 times net asset value. So if you take that percentage of net asset value of 0.5 and you move it to, say, 1 as we go into production at Los Ricos, so then you're more, you're potentially doubling that value of the company. Now, also, as you do things like we get to full commercial production, and then we have Los Ricos North, which we as we bring that from an earlier study to a full feasibility study and get it permitted, that again will affect how the value of the company will increase as a multiple to net asset values. If you look at a few companies, for example, that have been acquired recently, Silvercrest, Los Gatos, and even the acquisition of Juanicipio from Mag Silver. Those were acquired as multiples of net asset value, closer to about 1.7 times net asset value. So here we're talking about going from where we are today, 0.4 times, say doubling that multiple of net asset value to say 1 time. And then we see companies that are being acquired in this market at 1.7 times. So you can see there 0.5, companies being acquired at 1.7 times. So that's about 3 times from more than 0.5. But that's only half of the equation. The other part of the equation is net asset value of the company. And how can we increase our net asset value of the company? And we would say one of the real great ways to do that is further exploration of our asset. Now, we started drilling this in March 2019. We had great results. Some of those years, we would have published the best grade thickness intercepts of any silver project in business. And we didn't stop drilling because we ran out of targets. We didn't stop drilling because we weren't getting good results. In fact, one of the last holes we drilled in our drill program at Los Ricos South was 55 meters of 2.7 kilos of silver. But at some point, your retail investors, your institutional investors, they say to you, okay, you've drilled 250,000 meters. What does this all mean? What's the path to cash flow? What's your business plan? And we said, okay, we're going to show you what this looks like in production. And, we've done that. And we eased off a little bit on the exploration because people wanted to know what the whole district was going to make in cash flow and what the net asset value was going to be. So they could apply multiples to that net asset value. But at this point, and as we're building Los Ricos South, which I have up on the screen right now, and you can see those multicolored blocks, those are our reserves, and they're colored by year of production. But, and they span of about 1.4 kilometers of strike length, and they go down about 250 meters from surface. But what we do know about the district from old records is that the people that were there before us, and they were 1908 to 1930, they mined right up here, and it was a very, very productive mine for 22 years. Great, really good, strong, high grades. And in 1927, they discovered another very strong horizon down about 300 meters below where they were mining. And then they left the country in first quarter of 1930 because of a revolution, a depression, but we do know from the old records that other horizon exists down there. And then we see things like 10 to 15 meters plus a kilo and a half of silver equivalent. So what we're doing here while we're waiting for a permit, we have embarked on a drill program where we're doing some drilling down into the second horizon. We're also doing some drilling to the southern side of a fault that cuts off the deposit. And why that's important is because here you have, on the north side of this fault, you have results like 21 meters of a kilo and a half to 2. I think it was 21 meters of 2 kilos, actually, in a hole that we drilled very early there, hole number 9 in Los Ricos South. And they're mining, very productive mining, and right up to that fault. And then it was gone. So our drill program that we're carrying out now, we hope to have some results out to the market soon. And I will say that has been successful in finding the other displaced part of that ore body on the south side of the fault. So we're doing things like that to add more ounces around a mine that we're going to build over the next 24 months. And that's the other side of the equation. That's not the multiple of the net asset value. That's increase the net asset value to apply that multiple to. So we think we're going to have some good success while we're building this in finding more ounces around the mine that we're building.
Let me recap if I make sure I understand this. So first of all, because you have that fault, there was an initial deposit in a vein, but there was a fault and a fracture. So part of that got displaced relative to the other part. Part has been extensively mined. The other part was almost like lost, like a lost treasure.
It was lost.
And treasure
It was
hunters were looking for it. You were looking for it, and you think you may have some drill results to share in the next few quarters that will be exciting to. As far as
exactly right. And you framed up exactly right. And we just have exceptional records from this deposit. It was the family that a guy named Marcus Gailey was the copper baron of the U.S. and founded a company called Anaconda. And this was not in Anaconda, but it was his son, Marcus Daly Jr., who had this mine. And it was very, very professionally run. But they lost the structure, which was so productive for them, very high grade. And you can actually see it here in this diagram. They were going along here, and lo and behold, boom, that's where the fault is. And we can see it a little kinked as we go down in their tunnels. And over here, they went west and they went east and everywhere trying to find it, and they didn't find it. And what we know now is that if they had gone about 30 meters further to the west in this tunnel, they would have found it. So we have found it, and that's going to be an exciting part of the increasing the net asset value. We're increasing the multiple to net asset value by advancing the project, and we're increasing the net asset value by finding more around a mine that we're going to build. And of course, the other thing, that everybody knows increases net asset value is the rising commodity price.
Yeah, so I've got some of those chicken scratches here. Your multiplier already, you see a path to where it could be up by 2x to possibly more than 3x just because of advancing the project. Looks like asset growth, even the one you explained way back in the beginning of the discussion, from 2 million to 15 to 17 million ounces, that's a 8x, but that doesn't even include maybe this additional hidden treasure on the other side of the fault line that you've discovered. And in the spot price, we are interviewing analysts every week who are talking about reasons to believe that the spot price will likely go up by 2x or more in the next year. And it sounds like we're going to be in a very sweet spot for several years here. It sounds like exciting times for potential investors in your company. And if people want to stay, either deep dive into the interview that Rick did with you, that'll be in the description of this video. If they want to talk with your investor relations team and to access resources like the ones you've been sharing with us, where would they find those?
Well, you go to our website for GoGold. Steve Lowe is our VP, corporate dev and investor relations. And there you can get all his contacts. And Steve is always open to conversations with our investors, and he can connect myself to them as well. I mean, we are constantly talking to our investors. Anybody who's interested in taking a further deep dive, go to GoGoldResources.com. And Steve Lowe, of course, is on every press release, and all the contacts are there to contact Steve Lowe, and he can put the investor in touch with me as well. And we love to talk to investors anytime.
Rick often refers to the potential for beginners who are just stumbling into natural resource investing. It's like looking for a needle in a haystack. He says, stay away from the penny dreadfuls. It's not a beginner's game, but he's been at this for many decades. He spends more time at this than anyone I know. And for him to say, I think you should pay close attention to this company, is something that makes me and all of our viewers and subscribers sit up and listen and pay attention. We'd love to find out more about GoGold Resources. We'd like to keep your story in front of our viewers and subscribers going forward. So we hope that this will be a beginning of a beautiful thing, both for you and for our audience. And very grateful. Any final thoughts that come to mind since you have the ears and the eyes of our audience right now that you'd like to leave with us?
I think, you raised a good point. This is a business that, you have to pick through the companies. And when you have a guy like Rick Rule, who's been around the business for a long time, he knows the business. We're fortunate that we've known Rick Rule for a long time. Over the last 30 years, we'd hope to say that we've acquired a lot of experience in building mines. We have a lot of experience in Mexico, in the country, And these projects take big capital to build these businesses, and that's one thing I want to stress. In our business, there's a lot of promotion, there's a lot of selling, and that's fine. You have to sell your company, you have to sell what you're doing, you have to sell your business plan. But we are a business. We find ounces, we develop mines, and we build mines, and we produce metal, and that's how we build our business. The other thing would be that also over the years we've done many things. We bought projects, we bought mines, we've sold companies, and it's all about giving a good return to the investor at the end of the day, and that's what we aim to do. I'm a very large investor of the company as the CEO. I'd be the second largest reporting shareholder at about 6% of the company. So I have very aligned.
Your interests are aligned there. You have no conflict with interests because your success is our investors' success. So, and that's one of the things that Rick continues to remind us, is that he says he only will bring forward companies that he has personally not only vetted from a business plan standpoint, a balance sheet standpoint, a management team, a track record standpoint, and where they are in their potential growth curve, but also that he's also owns personally and recommends to his followers. So we're grateful for your presence here on Liberty and Finance, and we'd love to have you back again.
Well, great. Thank you. Look forward to it.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for July 8th through July 15th, 2025, while supplies last. First this week, we have 90% constitutional junk silver at spot price. That's right, no premium at all, just spot. Next, backdated 1-ounce platinum eagles are only $249 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.